Good morning all. Thanks for joining for this early morning call. Essentially, I'll start with the highlights of the performance in this quarter and then leave the floor open for questions, and I have the entire management team with me to answer all your questions. So to begin with, I think the last quarter we have seen the run rate of customer acquisition getting into stride, and we've had the highest ever customer addition acquisition in a quarter, which is about 8.6 lakhs of new customers that have been enrolled into the system. The loan disbursements have been about 4,712 crores, which is a 10% quarter-on-quarter growth. The gross loan portfolio is about 11,466 crores. As we have been consistently saying, we've seen this demonetization and the aftermath as a one-time impact. And glad to report that it is behind us now. 90% of our portfolio now constitutes of loans given from January 1st, and they are clocking the repayment rate of 99.8%. So essentially, we have only 10% of our loan book, which is the pre-demonetization era. The net NPA continues to be at 0.2%, as we have fully provided for the demon impact in the past itself. We have disbursed about 80 lakh plus loans from January to December 31st. And the fact that the repayment rate for these loans is about 99.8%, it validates our statements in the past that the demonetization and the aftermath is a one-time impact. And as we have been saying, we didn't anticipate any reduction in demand in this space, and it is validated by the customer acquisition that we clocked at 8.6 lakhs. I'm also glad to report that the January customer acquisition rate is much better than what we have seen in the last quarter. This only reinforces our argument that the demand-supply gap continues to be very high in this space, and we do not anticipate a drop in business going forward as well. However, we continue to be conservative than the rest of the industry in terms of ticket sizes. We also continue to be heavily focused on the rural space, which is where we think the demand and the quality of the business is, and we will continue to focus on that. On the financial side, the marginal cost of borrowing reduced to 8.5% in Q3, down from 8.9% in Q2. The profit for the quarter is 163 crores, and the 9 months profit is about 245 crores. The capital adequacy is about 31%. As we guided in the last quarter call, we have issued ESOPs to the management and the middle management employees, and that cost has come up to 17 crores for this quarter. So that has contributed to an increase in the cost to income ratio. But as and when we get the questions, we will give you a detailed explanation. As we have been consistently saying, we reiterate our forecast for the 435 crore PAT that we set ourselves to achieve in the beginning of the year, and we're extremely confident we'll achieve that number as well. As at the cost of repetition, the growth, both in terms of customer acquisition and disbursement, is back, and we expect the run rate to improve further as we go down the path. On the merger update, as we have reported, we have received the CCI approval. We are awaiting the RBI approval, but probably we expect it to happen in the next 30 to 45 days or sooner. That's something that we can't put a timeline on, but that is our anticipation. Lastly, yesterday we gave a stock exchange notification. Our Chief Operating Officer, K.V. Rao, who's been with the company for close to 11 years, has decided to resign on account of health reasons. He was with the company when it was a private limited company with about 600,000 member base. And today, when he left, we are at close to 6 million. All the senior management and the board thanked him for his contribution and wished him good luck and good health post his retirement. KV over the last few months has been handling new initiatives like housing loans and two-wheeler loans, which are in the pilot stage. And those new initiatives will start reporting to me for the time being. As and when we have any updates on that front, we will keep you posted in the next call. With this, the operational update and the financial update is done. I leave the floor open for questions. And as I said, we have the senior management team here to answer the questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Kunal Shah from Edelweiss Securities. Please go ahead.
Yeah, congratulations, sir. Good set of numbers. Firstly, given that now things are settling down in the MFI industry, and this quarter we had seen almost like addition of 60 odd branches as well, and almost say 120 odd branches in the first 9 months. So now, how do we look at in terms of increasing the penetration and expanding, given both the industry outlook as well as since some merger is also there along with IndusInd Bank. So how should we look at it in terms of the expansion?
So the expansion plans will continue. Our focus will continue to be on the rural areas. Essentially, the focus has always been that we penetrate deeper in places where we exist through contiguous planning. We use a lot of these population density data, route maps, and so on and so forth for our planning purpose. Our focus will continue to be on rural, and there will, now that operations have stabilized post demonetization in terms of center discipline and so on and so forth, there will be a relentless focus on improving the efficiencies at the loan officer level. So the plans will continue. Once the merger happens, we will look at adding new products from the IndusInd product suite.
I could just to add, we have mentioned this in the past that we will like to add about 200 branches every year. So, branch addition is also in line with that thought process. Branches have been added in geographies where we are already present, the way MR explained, contiguous planning was used. And this should continue in the coming financial year as well, because our target on the growth side for 45 to 50% would have a healthy contribution of about 30% from new customer base addition.
Yeah, and to add to that, on the current basis, we generally focusing on north and central and eastern part of the country. Majority of this growth of branches has happened in Punjab, Chhattisgarh, Rajasthan, Haryana. So just to tell you exactly how
in the northern and western.
Yeah.
Okay. So 200 odd branches. So we had done 120 odd in the first 9 months. So 200 is this fiscal, and we will continue with somewhat a similar kind of run rate in the next as well, provided.
Yeah. So as Ashish said, our general plan is to add about 200 branches every year. So we are staying the course on that.
Okay. And secondly, broadly in terms of the mix between IGL, MTL and LTL, and even in terms of the average offtake which has been there, so that's around about 20,000 rupees, very near to the gross loan portfolio. But this time there is not too much of an uptake in MTL. It's largely coming in on IGL. So do we see any kind of a change in terms of maybe the ticket size going up, post getting pretty comfortable with the environment, and that should get back to 23,000-24,000 rupee again?
See, Kunal, basically the focus the first half of the year was actually on recovery collections, trying to stabilize the operations. And we are now back to, as Emma explained in the opening of the call, that we have a highest ever customer acquisition. So when we say customer acquisition of something like 8.6 lakhs in a quarter, all these are basically IGL1 loans. This transitions into the first cycle, which is IGL1 loans. It is even only after 6 months of IGL. So that is why in terms of percentage basis, you see MTL contributing lesser, but MTL on an absolute basis is also growing in quarter-on-quarter basis.
Okay. So maybe as the cycle, maybe as and when we get into this, we will see higher contribution of MTL and a higher ticket size as well.
Yeah, Kunal, Ashish tried to explain that very clearly. I'll again explain. If we are doing 40% of disbursement to new customer acquisition, obviously MTL as a percentage will look lower, but it doesn't look lower in terms of numbers.
Okay.
So that's how it. So it's not that MTL is degrowing. MTL is proportionately increasing, but because IGL1 grew faster, then the percentage looks a little different.
Okay. Yeah. Thank you.
Thank you. We leave the next question from the line of Ritesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. So I noticed that the rejection rate and hit rate for our products have come down in this quarter. So is it a reflection of we going into new geographies where the competition is less, or generally all across the board competition has reduced in the sector?
So actually, if you see slide 26 of the earnings presentation, Nidesh, you will see that the last quarter the number was 28%. This quarter on a gross basis the number is very same, about 28-29%. What we have done this time is in Q3FY18 we've also reported on a unique client basis what is the number. On a unique client basis the number is 92%. So basically the difference in the two is only approach. There is no change in the quality as such. It's basically the same. What we have done this time is we have also reported in terms of unique basis. For example, if the customer applies for IGL or MTL, LTL, and each of these are separate loans, and suppose she's applied for, what we also do is we actually pre-approve, we actually pre-approve the client base, and the loan officer actually tells the customer that she can apply for a loan. So for pre-approving it, we do a first CV check. Then when we are actually giving a loan, taking loan application, we do a second check. So we were counting it as 2. So if you do it on a unique basis, you count it as only 1, then the number is 19%. So this is just a mathematical number, but otherwise there's no change in terms of behavior or quality of the data.
Okay. And secondly, sir, on the asset quality, we have noticed that gross NPA have reduced both on account of write-off and as well as we have seen gross NPA reducing because of better collection. So can you give some color on what is your expectation in terms of recovery from the portfolio which is under gross NPA, as well as any color on how is the collection efficiency in the state of Maharashtra?
So the gross NPA, as you would have seen, has reduced from 441 crores in September to 411 crores in December, and now that's about something like 30 crores. About 11 crore is on account of recovery and movement from substandard to standard, as well as recovery in substandard itself. The remaining 18 crores is just technical write-off. There is no hit to the P&L, just a technical write-off. So the net basis there is 11 crore recovery in the movements from the NPA bucket to a standard bucket, including collections from the substandard bucket. Now, moving forward is, so we've always said in the past, in the last quarter itself, it's very difficult to guide in terms of how much will be the recovery going ahead, but there will be some recovery. Amount-wise, we're not able to really guide you. There have been some good collections in UP in the last quarter, and Maharashtra also there have been some contribution.
Yeah. So just add to what Ashish is saying, one of the highlights of last quarter probably is that the recovery cycle has turned positive in our favor. Though the number looks about 11 crores, these are hard buckets. These are difficult customers from whom we have to recover. So we are very positive we should have the trend continue. As regarding the largest opportunities from where we have got the recoveries, UP continues to take the spot. We have some green shoots in Maharashtra also emerging. We also asked about our collection rate in Maharashtra. It is hovering in the range of 92% because there are the previous ones which are still continuing for the recovery. But on the new edition that we done after January, we are at 98% Maharashtra also. But it is a very small portfolio. 99.8%. It is a very small portfolio.
Okay, sir. Thank you for your response. That's it from my side.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is on the line of Digant Haria from Antique Stock Broking. Please go ahead.
Yeah, hi sir. Congrats to the team on getting above the previous highs again. That's and sir, I have two questions. One is how many centers or talukas or districts would have become black in the post demon event for us or maybe for the industry. If you can throw any light on that, where everyone has just decided to come out of those areas.
Digant, you are asking me at level. I think it will be difficult for me to answer at that level, but it's blacklisted. Yeah, unless you're asking about blacklisted. Okay. On a blacklisted level, Maharashtra continues to be a stress here. We are not blacklisted in that sense, but we always have districts which are under watch, where we do not source, where we do not expand, we put our existing portfolio on maintenance. So there are about 113 branches across the country which are on a maintenance mode, where we just watch the portfolio and keep focus on collection. 60% of this continues to be in Maharashtra, then it is followed by Karnataka and substantially in UP, and a bit of it in Madhya Pradesh. So the mix hasn't changed from the way it was at the demon time. And since the collections on the new portfolios are perfectly fine, we have not seen any new hotspots also emerging, barring a few incidents of flood and all that which are natural causes.
And just to add to that, the additional point is even with all this of trying to have some branches in terms of growth neutral, we still able to expand 10% in terms of QOQ growth in portfolio. We're able to add 8.6 lakh customers from the positive branches, growth branches.
All right. And second question is, it's almost now 6 months that we have again gone back in the growth mode. So on the ground, how is there any difference in the way we or others? I think we were doing business the same way before, but has the aggression or has the the methods which have been used in terms of over leverage of the customers and the bureau reporting have they undergone any change with respect to the competition?
No, I think the demon had its impact on the industry. And as we have been saying in the past, the smaller ones probably fell by the wayside. The ones who got badly affected have gone slow in terms of their growth. And partly some of them have transitioned to SFBs, and with their preoccupation in terms of becoming a full-fledged bank, I think they kind of slowed down. So we see the intensity of competition kind of coming down in the last 6 to 9 months.
Okay. All right. Thank you so much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. We'll take the next question from the line of Nilanjan Karfa from Jefferies. Please go ahead.
Hi, morning, Amar and the team. Quick question, since there is an impending merger, I just wanted to understand how the underwriting machine is going to change post-merger. Is there any early communication that you can kind of tell us?
No, it's too early. We are waiting for the merger to happen before we start taking these decisions. But at the high-level understanding when we were having the merger process, nothing on the ground is going to change. They believed in this model, Investment believed in this model, this management and staff. So I don't anticipate any major changes happening on the underwriting front, but that needs to be worked out as the merger process keeps going on.
Okay. So, but if there is a system that you have in place, is the same system going to be imported under IndusInd Bank, or and given that I think the understanding is we will kind of evolve into more individual products.
No, I think the space for the understanding with IndusInd is they believe the model, as I said, they believe the management and they believe the strategy. So there's not going to be too much change into the strategy. But as we have been communicating in the past, one of the advantages of this merger is if we go cashless on the repayment front as well, over a period of couple of years, we'll have enormous data of which customers are paying on time through their bank accounts, and we have an insight into their savings habits. Mm-hmm. So we can graduate some percentage of the customer to individual level based on the analysis of their bank accounts and savings pattern and so on and so forth. But at the customer acquisition level, at the microfinance space, we think JLG works best, and it has proven itself once more post-demerger, and that's the strategy we will continue with.
Right. And any early thoughts on the subsidiarization? I mean, if you can talk about any employee loss that has already happened?
There's been no employee loss, except as we said, the Chief Operating Officer has purely resigned on health grounds and has nothing to do with the merger. Mm-hmm. Our senior management team continues to be with us. Everybody's been supportive of this merger.
Okay, and any early thoughts on the salary components? How it will be post-merger?
No. As I said, it's too premature to talk because we have a lot more approvals to get in place. The Reserve Bank approval, the Competition Commission, and the NCLC. But to just repeat what I said, at the understanding when the merger happened was that there's not going to be a significant, there's not going to be any change in the way we operate, and we'll be running as we are doing. But that needs to be seen. In terms of salaries and stuff like that, there's been no discussion at all with that.
Sure. Thank you so much.
Discussions are also with the IndusInd is all about the BC, the arrangement we have, and the loan side. There's been no big discussions on the post-merger scenario at all, because we need to still get the approvals, regulatory approvals, before we start engaging in this.
Right. And sorry, if I can just add, so the under the BC model, our existing set of employees are going to function as cross-sell for the other IndusInd Bank products. Is that how it will?
You're talking about the current status or going forward?
No, going forward, obviously.
Yeah, so larger idea is, for example, savings, access to savings and small savings products like recurring deposit is a big need of this segment. And that's something that we have piloted in Gulbarga successfully. That's something we would want to continue.
Right. Okay. Thank you so much.
Thank you. We leave the next question from the line of Ritesh Jain from Investec. Please go ahead.
Thanks for the opportunity, sir. So, can you share some light or can you give some color on the liability experience that we have seen in our pilot projects that we were doing as a Kirana Bank with IndusInd?
No, there are two types of pilots we're doing. One is the recurring deposit pilot, and as we mentioned in the investor deck, we have seen a significant difference in the repayment rate for people who opted for a recurring deposit product and the non-recurring deposit product. For example, if you go to slide 4 of our investor deck, the reduced impact of political risk is clearly articulated why we think recurring deposit is going to add to the quality of the portfolio. That is successful. We are slowly improving the percentage penetration. About 10 days back, I think the percentage penetration on recurring deposit was about 50%, around 50%. We anticipate this will go to 70-80% over a period of time, because this is a demonstration effect as well. On the Kirana store, yes, we are continuing to pilot the whole cashless model, but it's still in a pilot stage because we still have to get a grip around the processes. We are fine-tuning the processes as and when we get insights into the model. And this will continue for some more time.
So if I hear you correct, 50% is the penetration with clients with respect to RD in the branches where you are doing the pilot.
Yeah. So in the pilots where we are doing the recurring deposit, 50% of our loan clients have opted for the recurring deposit.
And what is the average size of the RD or average number?
So I got it. See, this is all 50 rupees RD per week. Yeah. It is not about the quantum of RD. This is not going to generate huge liability in terms of values. It is more about giving an access for the customers to park their small savings, which today don't have from a formal financial institution. Let's say the nearest bank branch for them would be 5 kilometers. Today we are telling them, listen, the deposit, you can park this deposit in your bank at your village level through the loan officer. So that's the idea. But as we have seen post-demonetization, there is a significant repayment rate improvement or superior repayment rate for those customers who opted for a recurring deposit product.
Sure. Thank you, sir.
Hello.
Yeah.
Excuse me, sir. Should we move on to the next question?
Yeah, please.
Participants, in order to ask a question, you may please press star and 1. A reminder to the participants, anyone wishing to ask a question may please press star and 1. If there are no further questions, I now hand the conference over to the management for the closing comments.
Thanks for taking time out to participate in the call. Please, reach to us for any further queries. Thanks.
Thank you. Ladies and gentlemen, with that we conclude today's conference. Thank you for joining us, and you may now disconnect your lines. Thank you.